Johnson, let's start off with how the market responded to the CBR remaining at 18.0% for the sixth straight month.
Well, it was kind of, the market really had expected that decision. I don't think there are too many analysts looking for a different outcome because everybody had been seeing what the trends were, inflation, the weakening of the currency as well. So it was almost predictable. So you could argue it was priced in. Market just took it in its stride.
All right, maybe we've probably beaten this point to death across the day here on CNBC Africa, but tell me, the shilling appears to have taken a break, a commercial break, even at around the 85 range. Do you see it remaining there?
Well, I always say that the value of a currency is really dependent upon the activities of its custodian, which is a central bank. So in this particular case, they worked hard to try and support the shilling. Finally, they got a handle of it at 85. It had touched a low of 86. We might see some appreciation coming through because of inflationary worries. Of course, underlying inflation and for the central bank and or the MPs in particular is a cause for concern. So they probably will, to help tick that down a bit, they probably want a stronger currency because as you know, most of our imports are capital goods and oil, so which are really important. So to help manage prices, perhaps they might want to consider allowing the shilling to strengthen and see the lower prices for the average consumer.
There's an academic discussion, but I want you to indulge me in this, about excess liquidity. The CBK was in the market today trying to mop up about 4 billion shillings, but some people are asking, what excess liquidity? Because I don't see it.
You see, excess liquidity does not necessarily mean that everybody has liquidity.
Exactly, that's a good point to note.
Yes, so I mean, it's just that there's too much money floating around, and excess liquidity manifests itself either in because purchasing power is redistributed, so prices rise, and it lead to lower purchasing power for everybody else. So that's one of the manifestations, and of course that also manifests itself in weaker currencies. So excess liquidity could usually manifests itself in weaker purchasing power and therefore higher inflation.
At the Nairobi Securities Exchange, you say the day was generally positive, though very little sales, and the NSE 20 appears to have closed down. But overall, what is your analysis of this?
Well, there's a bit of some consolidation. Actually started off weakly, perhaps got a bit weaker as the day went on, but as it closed, there was some sort of upsurge. However, the reason why your numbers are slightly lower is because we use average pricing rather than end-of-day pricing. But for me, there was some strength coming through towards the end of the day trading, and we expect to see that rolling over into the following trading session.
The surprise performer, Longhorn Publishers, the new kid on the block, up. The biggest gainers actually today, 9.59%, up to close at 20 shillings.
Not surprised really. Very few sellers. Everybody, or probably anybody who wants to participate, and you'll notice that the liquidity is low. Few shares outstanding, about 58 million. Most of it is closely held, about 70 to 80% closely held. Nobody is in a hurry to sell, and that lack of liquidity, but increasing demand as people understand the stock more and more, is likely to see the share price raise. So what you're seeing there is perhaps some of it is actually true value, but you're likely to see some scarcity premium coming through, pushing up the share price.
We don't usually see too much activity in the media stocks, but the Standard Group was today up 7.87%, closing at 24 shillings. What is happening around there?
Again, also that one was liquidity issues. Few shares, I think there were a few transactions on that counter. Lack of demand, so as demand increases and supply remains restricted, I think at some point the buyers will just take whatever is on the table at whatever price, and that's what we saw.
Has the rally in uchumi ended? Down today almost 4%.
We're going to see some volatility, but if you watch uchumi closely, you're seeing the deviations are getting smaller and smaller. That tells us we are going through the tail end of the price discovery process. So perhaps what we'll be seeing is the share price settling at around 17, 18 range there. Pending, of course, the full year announcements, which should be coming through at around August.
All right, let's finally finish up with Kapchorwa Tea, which was the other one that was down, and again, not one of those shares that turns up on this list too often. Around the same time, the average price of top grade Kenyan tea slipping to $3.60 per kilogram at auction this week.
Difficult to say. Perhaps there was a seller who really wanted to exit. Because on the other hand, I think we had Williamson Tea up as well, sister company incidentally.
Right.
So difficult to say on that one.